Hi, my name's Laura Chitt, and I'm a director at VatNav. I know I've talked quite a lot about the TOMS position for serviced accommodation operators after the Sonder case has been released. Today, actually, I don't really want to talk about TOMS at all, but I want to talk about some alternative options that may help some serviced accommodation providers. Because obviously now that Sonder has lost its appeal at the UTT, um, obviously we're still waiting for the outcome of the case at the Court of Appeal, which will probably be released at some point next spring or summer. Um, at the moment, the whole thing with Tom's is very uncertain. So a lot of businesses understandably want to limit the risk for them, especially for the position going forward. So I wanted to set out some options which may be useful to consider, which are not actually at all Tom's, and may be open for some businesses to reduce their risk. Um, so I would like to just start off with a few slides on this. Now, the use of TOMS, obviously, for most businesses, is going to give the best position, either because it delays or perhaps even means registration isn't necessary at all, but also because once a business is registered, if they're using TOMS, you only pay standard rated VAT on the direct margin. And although input VAT recovery is blocked on direct costs under TOMS, most of the direct costs of buying in leases are non-VATable anyway, so that you don't lose out. So um, TOMS is probably still the best position, but the problem, of course, with TOMS is that, you know, we don't really think it's going to apply in a lot of cases at the moment. And of course, you know, we don't know how the case is going to go next year at the Court of Appeal. But the problem is we're not going to know the outcome for a year, and a year is a long time in business. For some businesses, it's you know, whether or not something is used now, some sort of change is made now or not, could be for some people the difference between going bankrupt and not, to put it quite coarsely. So these alternatives are not going to work for everyone. But I did promise earlier in the year that I would set out some alternatives which you may want to consider. Our approach has always been quite risk averse. And yes, some alternative structures that people are using may be more likely to give a sort of a Tom's applicable result, but we don't know that. And I think the what we've been finding since the UTT decision was released in January is that people are sort of at two extreme lengths. Either people are sort of catastrophizing and thinking that everything's going to, you know, the world's going to end, or are sort of thinking, oh no, I'm still going to use Tom's, and you know it's going to be absolutely fine. So we think where we are is we're thinking, well, we don't really think either of those approaches is the best. We think every business needs to consider their position, and whether or not Tom's, you know, is feasible in the long run or not is going to become apparent next year. But for the short term, I think there needs to be some degree of protection of your revenue. So Sonder Europe obviously has cast huge doubt about the use of TOMS, and currently they're in a loss position at UTT, and we just don't know what's going to happen. The case is being appealed to the Court of Appeal, and I think we're probably expecting it to be heard at some point in the spring of next year. So the outcome potentially will be next spring, summer, potentially autumn. We don't know. And if Sonder loses, businesses which have very similar circumstances to Sonder will just not be able to use TOMS, and this is going to apply on a backdated basis as well, for businesses who have continued to use TOMS in the same circumstances as Sonder. If someone has an alternative circumstances, we're aware that there are very sort of different setups and arrangements that people have in place. The answer is potentially we don't know. I think we've made it very clear ourselves when discussing these alternative approaches to businesses. We've made it very clear we have no idea what is going to fall within Tom's, if anything. And the problem, I think, is that the decision we had in the UTT was completely, I just thought it was quite poor, personally. I think we really only got one paragraph talking about the court's actual decision, and that paragraph was quite vague. So we really don't know the answer. And hopefully next year, whatever the decision is, hopefully it will be clearer. But in the meantime, we've still got a good year or so. Actually, less than that because it's now September, but we still have some time to go. So we have put together a few alternatives that we think people could be considering. Now, the first one, the flat rate scheme, is not anything new. Um, it's also only going to apply for businesses at the lower turnover bracket. So you can only apply for the flat rate scheme when your turnover is less than 150k, and you must leave once your turnover goes over 230k per year. It can only be considered for businesses who meet this criteria, and you do have to apply to HMRC for use of it. You can't just decide to use it and do. You have to request it. But under the FRS, you pay a flat rate only. For serviced accommodation, usually this is 10.5%, and I've put there that assuming that you commonly buy goods for use within your business, there are some limits. You have to buy a certain amount of goods per year to qualify for the 10.5%. Otherwise, you go to the sort of the anti-avoidance percentage of 16.5%, which was brought in a few years ago, which is sort of not really worth bothering if you fall within that for most businesses. And on most items, other than certain capital expenditure, you can't recover input VAT. So an example of how this may help businesses, gross turnover, let's say, is 150. Let's say we've got total costs of 100,000, including input VAT of 2,000, and we've bought goods in the business to a value of 5,000. So if we were using the normal rules, we've got output VAT is just going to be out of the 150. So with a gross turnover of 150 and a rate of VAT of 20%, we call it the VAT fraction is 1/6 because it's 20 out of 120. So output VAT payable will be 25k. You'd recover the input VAT of 2 grand, which gives you VAT amount to pay of 23,000. Under the flat rate scheme, we pay output VAT of 15,750, which is 150k times 10.5%. The rate is a percentage of the gross, not carve it out in the same way. You can't recover any input VAT under the scheme, and so you're paying VAT of 15,750. Now, of course, it's not probably going to be as good as Tom's, because under Tom's, I guess your margin would be 50 and your VAT payable would be 13 or something, but it's probably not going to be as good as Tom's. Actually, in this case, it is better than Tom's. Anyway, but it's a viable approach, but only for small businesses. The limitations, of course, are you have to have turnover of less than 230 in order to be within it. To apply for it, it has to be less. You have to have turnover of less than 150. So if the goods bought within the business are less than 2% of turnover or 1,000, whichever is higher, you fall within this 16.5%, and then so it's not really worth bothering. It's probably a worse result. The other thing is it does apply to all income of the business. So even if you have some exempt income, you still have to tax it at 10.5. So if you have a lot of different income streams within the business, then you might want to consider that in a lot more detail to make sure that you're not paying 10.5% on exempt income as well. If you just have flat sort of serviced accommodation to tourists and visitors, and it's all on a short-term basis, then you're probably okay. But if you have multiple streams, if you have AST income as well, then it's probably not a good use of a scheme. And input VAT can't be claimed, remember. So if you have a large amount of input VAT in the business, it's also probably not worth the use of it. So yeah, for now and the future. The other thing we've discussed with quite a few people is is acting as an agent rather than a principal. So, and this is quite a common structure for many businesses. Essentially, instead of buying in a lease from a landlord and selling on to businesses people on a nightly basis, you would act in the middle as an agent, and instead you'd facilitate the supplies from landlords to travellers. Now, obviously, you have sort of things like Airbnb, other OTAs who are themselves agents, but we have lots of other businesses who are similar in nature to in practice, I suppose, to what a lot of serviced accommodation operators are doing. But instead of buying in a lease and selling on 1 or 2 nights or whatever to the traveller, they're not. They're arranging for the owner to make supplies of nights or weeks to the traveller. Um, Now, in practice, this can look very similar. You can still, as part of your sort of managing agent agreement, do stuff that you're currently doing. You can arrange for the utilities to be paid on the owner's account. You can arrange for repairs and maintenance. You can arrange for replacement furniture. It would just be on the owner's account rather than yours. The guest may know very little difference. The owner, of course, may want to see a certain return per month. There are certain ways to um, not so much guarantee this amount, a particular amount, but many agents have sort of arranged minimum levels, and so it's they would sort of take a smaller cut, for example, between certain percentages. So you can kind of get to a position with your owner, assuming it's on a commercial basis, where you've almost given them a sort of at least a certain amount of income per whatever month period as it may be. So although a lot of owners may be reluctant to sort of say, oh, that's quite risky, agents can have various clauses in place to sort of help that. That would need to be looked at very carefully. But you know, a lot of people I know are sometimes do not appreciate the importance of contracts. But in this type of case, we would always stress, as we have done with any lease arrangements, that contracts need to be properly looked at and reviewed. But for many businesses we worked with over the past few months, this has been a good, viable solution. Now, the limitations, obviously, here, the owner themselves is going to be supplying taxable accommodation. So if you have, you know, like if you deal with loads of owners and they've all got 1 or 2 properties, that's probably going to be fine. They're probably their income for this will probably be under the 90K VAT registration threshold. However, if you're dealing with commercial landlords, they're likely going to have a lot of income. If they're going to be VAT registered, they would have to pay VAT on that accommodation sale that you're facilitating. So where you have landlords whose total turnover of their own sales of the accommodation is more than 90K, that's not going to be ideal because they would have to pay the VAT on that. So this is really only going to be of use where the landlords in question are not currently or not expecting to be over the VAT registration threshold on themselves. And yeah, I think some people have sort of said their landlords wouldn't be happy with taking on any financial risk, even though, as I said, there's some ways to limit risk. And the other point, I guess, is that a lot of operators don't want to disclose to their landlord how much commission they're making. And in a lot of cases, because you do have to disclose to the landlords what their own turnover is, and therefore how much of your commission is being taken away to give back to them the remainder. There is going to be some visibility for the landlords of what that is, which again, some people haven't really liked commercially. You know, it doesn't have to be glaringly obvious what it is, but it still has to be disclosed to some degree. The other thing I think we've discussed with a few people is actually it is the use of TOMs, but on a slightly different basis. So instead of buying in a lease from a landlord, you would buy in nightly accommodation on request. And again, this could be a case of we guarantee you a minimum number of nights a month or whatever. So there is always a sort of, some sort of lessening of the risk for landlords. So this would combat the disclosure of commission. It also means that you've got more clout to sort of set your own prices and to and a lot it's a lot easier to sort of guarantee a sort of minimum level to the landlord to some degree. But basically what you would do here is you would buy in the accommodation on a nightly basis, and obviously here you'd be buying it in per night, so you would expect it to come fully furnished with utility bills. You wouldn't be doing repairs under that contract. You may have a separate contract as managing agent, but we can talk about that another day. But here it would just mean that it's slightly easier and slightly more representative of what you currently have. Um, but again, this would need to be looked at very carefully. What we're looking at here is not that you buy in on a nightly basis as a fixed term lease. We would be looking at you would be buying in tourist accommodation on a nightly basis. So you'd have to very differently structure what you've currently got in place with the landlord still. You couldn't use your current lease contract to do that. Of course, the restriction there is that in this sense, the landlord is still making a taxable supply, so it doesn't get round the fact that any landlords who are selling more than 90K's worth of taxable stuff per year would still need to register for VAT. So it's only going to work if the landlords in question have a taxable income of less than 90K. And again, it needs to be looked at very carefully. Um, so a lot of businesses as well have been looking at the corporate market. The Toms and corporates, actually corporates don't really like Toms very much because you can't show VAT on your invoice and they can't recover the VAT. So actually using Toms when selling to corporates is more expensive. So actually selling to corporates using the normal VAT rules, 20% VAT, with an invoice that you can provide to them for VAT recovery is actually a lot more useful. So we've seen a lot of businesses start moving towards the corporate market for that reason. And I just want to say a quick word about the reduced value rule. So a lot of people seem to be under the impression that if you make a sale to another company for more than 28 nights in a row, you get this 4% rate. Now, that's not the case. There is a reduced rate. It's not even a reduced rate of VAT. It's a reduced value rule for VAT purposes. And what it means is that when an individual stays in a property for more than 28 nights, you only pay VAT on 20% effectively of the full value. So 20% of 20% is 4%. So effectively for the same person staying in a property from nights 29 onwards, our effective rate is 4%. But it only applies in certain circumstances. Firstly, the same individual has to physically be in the property for that period. You can't just sell, let's say you sold 3 months of bulk nights to a business, but that business is going to sell it on to 90 individuals for 90 separate nights. That's not within the scope of this rule. You have to sell the same individual person has to be sleeping in the apartment for the whole length of the stay. It's not just any sale you make. So you can't use that. I think some people think that's an option. It's not unless you actually have an individual within there, the same person for a stay of longer than 28 days. And also HMRC have been questioning this for serviced accommodation because they're saying it's not similar enough to hotel accommodation. And I think they can't really have their cake and eat it. They can't say it's taxable at 20% because it's similar to hotel accommodation, but no, you can't now use the reduced rate rule or reduced value rule because it's not similar enough. It doesn't really make any sense. But the point is that HMRC are sniffing around it. I'm yet to see a proper, well thought out reason for this not applying for accommodation that is enough of a hotel type setup to qualify for the standard rate. But yes, we will see what happens with that. But I think there's more to a point of saying that actually, although the reduced value rule does apply in some circumstances, it does need to be looked into carefully because we don't want people who think this applies. I think a lot of people are talking to their mates down the pub and they're using the 4%, and actually it doesn't sound quite right to me. So I think you need to look at this in a bit more detail before going ahead. And finally, just in terms of protecting your business, it's the Sonder case, we are quite concerned. I think a lot of people are not taking this particularly seriously. But for businesses who have been using Toms, we know that a lot of people have been told that there is no risk in using Toms, which is absolute rubbish, to be honest. But the thing is that if someone has been using Toms for the past however many years and your circumstances are similar to Sonder, if Sonder does lose at Court of Appeal, there is a very a huge likelihood of a backdated payment to HMRC, and that could be very large sums. I think a lot of people seem to think that HMRC is going to let everyone off backdated payments. I don't see any reason for that to be the case or for that to be a thought process. It may be that HMRC put something in place to help alleviate the burden for people. I don't know, some sort of payment terms, time to pay arrangements, but we don't tend to see HMRC letting people off for the backdated position. That just isn't really a thing. If your business is exactly the same or similar enough to Sonder, and Sonder continue to lose, then I don't really see a way around it. So I think a lot of businesses um, will need to do something to protect their own position. So this video has mainly been about protecting the position going forward to make sure there's no other potential of VAT payable. But we also probably need to consider for some businesses who are similar to Sonder how to protect the backdated position. We have done a lot of consultations over the past few months with people who are concerned. We are very happy to try our best to help. We have contacts as well who are looking at the kind of worst case scenario for businesses and helping businesses try to protect their own sort of financial position too. The whole thing, I have to say, is incredibly frustrating for everyone involved. I think we haven't heard anything sensible, if I'm honest, from HMRC on this. There's been a lot of conflicting advice um, from HMRC all along over the past few years, and I think I'm feeling quite angry and frustrated that HMRC is sort of messing with people's livelihoods because we haven't had anything out of them, and we know that most businesses are trying to do what's right for them. And I was sort of in the middle of this quite confusing and inconsistent position. But I think what we want to do is make sure that everyone is protected as much as possible, whilst, as people have quite rightly said, not being in a position where either they have to face hiking their prices by 50% or having to go bankrupt, which was what we've heard from some people. And it's just, I think a lot of people are in the middle of this, and it's not very fair. But I think we are where we are, unfortunately. We'll hopefully know a lot more next year. But for the meantime, we probably want to make it clear. And I think, as I said, we've tried to take a sort of down the middle approach. But I think the reason I've potentially been a bit stronger here is because I think potentially people are not taking it as seriously as we'd hoped. But yes, this is a potential issue for a lot of businesses. So we'd really urge you to all consider the sort of worst case and potential alternatives for your business. Without wanting to sort of end on a bad note, we are here to help. We we want to try and give as many people alternatives as possible, but we also want to make sure that people are planning for sort of the worst case and what could happen next year. Please do let us know if you would like to discuss your position or if you have any concerns, and we will do our best to help you. Thanks very much.